Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey.
Hey, man, how are you?
Good. How are you? How's everything?
Good. Are you ready?
Yes, I am. So this morning you sent me an article that was pretty interesting. I was reading it, but I couldn't fully grasp it, so I wanted your help a little bit.
Yeah, I mean, look, I sent you the 13 Fs. It's something that pops up on Zero Hedge each day. The not each day, each quarter. So once every quarter, the hedge funds and the mutual funds, they all have to put out their portfolios that are 45 days delayed. So it's right around February 15th, 45 days from December 31st. So whatever everyone had on December 31st, they have to report to the SEC. Okay, so that's where, you talk about the guys from Reddit want to see what Melvin Capital had. You could see it now. You could see that as of December 31st, he had raised his stake in puts to, I think he had 60,000 puts, 6 million puts on. So these are things that people look at to see what the big guys are looking at. Or what they have in their portfolios. I think it's also good because if you're looking, I think the main purpose is that if you're looking at UOA, if you are trying to figure out what you are, who you're chasing, and you should know who you're chasing. You should know who Melvin Capital is, who Steve Cohen is, and what they do, what their strategy is like. And so part of knowing what they do is researching them. The other part is understanding their portfolio, how it moves, what the way it shifts, buys, sells. And then I think after reading all of them, you start getting a good glance at and a good understanding of where the money is flowing or where people are moving their money to. So I think it's a good read just for you to collectively understand. Everybody makes a lot of noise about Warren Buffett, and we'll talk about that one today. But there's a lot of other people besides Warren Buffett, and you should get comfortable knowing who these people are. One of those people is Melvin Capital. And even though they got beat on one trade, which caused a ruckus in the market and probably caused them to almost blow up, that doesn't take away from the fact that the guy is excellent. The guy's really, really good. And you should be paying attention to the way his portfolio is moving and what he's looking at, where are his big trades, and how much money he's putting to work there. So that's what I would say. I would say to put the link for everyone to at least take a look. They do this once every quarter, and they just sort of highlight what people buy and sell. In the news today, I think there's a couple of big things that you're starting to see. I mean, producer prices of that the producers, the companies are experiencing are going up. They're going to pass that along to the consumer. Probably not a good thing, especially in a time like this where the consumer is stretched pretty thin. Retail sales were up big, mainly Amazon and people buying online now and finding things to do while they're at home. So these are sort of big trends. You got Walmart earnings tomorrow, so that's something that I think will be very positive. I think it should be. What do I know? But I think that they should say good things. They'll have an investor conference as well. And JP Morgan basically. They're flip-flopping. They win any way possible, right? They have a guy who says it's terrible. Then they have the CEO said it was a fraud. Then JP Morgan comes out at 40,000 saying you got to own it. At 50,000, just crossed 50. They're now saying that, it's not sustainable. So I'm not sure which one is it, but it's all over the place. And I think that's interesting. But the stocks, Bitcoin above 51,000, stocks are, Riot and Mara, the ones we've been looking at there, continue to explode. The last thing I would say is that I want you to notice that the media is starting to turn the narrative of this chip shortage. They're starting to think maybe it's negative. I mean, we've been talking about this for a week and a half. Yeah. In a way, it's bullish for chips, and it's bullish because there is demand. But in another light, in the backdrop of the market going down, people are going to say, we got to point to something. We got to point to some reason why the market's down. And you see them starting to look at the chip shortage as potentially negative. So I would keep an eye on that. And I'd keep an eye on how the articles are coming out and the perception of what that means. And, the media is getting their clues from big hedge funds. They're getting their clues from the companies and sources and whatnot. So that's something to keep an eye on, because I've been thinking a lot more about it, and keep on saying that maybe it's negative, this chip shortage. You slow things down because products can't be made. So, you got GM, Ford, Enphase, Microsoft, Sony. These are big leading companies in their industries that are saying, hey, there's something really wrong here. And we're not going to make our numbers, and we got to shut things down. And we got to, we're already in a lockdown, and now they're telling us they got to shut things down because there's no chips. Again, it speaks to the supply and the global supply of how things move. The process of movement.
Now, do you think there might be an opportunity for another chip maker to jump in and start producing?
It's hard.
Not as popular.
It takes 3 to 6 months to actually build these factories. So I think Taiwan Semi is overboard. But again, Taiwan Semi, all it takes is the Chinese government to say, we need a little bit more chips for us. So make sure that you put it. So, Intel does their own chips. It could be a little bit of a problem. Look, at some point they're all building probably factories to build these chips right now, but it does take time. And then eventually they'll have millions and millions and millions of chips to go, and everybody will get what they want. But in the meantime, while that's happening, things would seemingly slow down, in my opinion. Something to look at, which leads us to, I guess, let's just start talking about what we're seeing today. Do you have anything in mind, or did you see anything?
Yeah, let's look at the cruise lines. What do you think? CCL.
Yeah, I saw a couple of things in CCL. One that is CCL, and the other one NCLH. So NCLH has got their earnings coming up. So the CCL, people are buying March. They had just reported April is the next earnings. Doesn't show there, but I know they're in an April cycle. They are buying today in CCL across the board 25s, 27s, 30s. There were bets being made here. The open interest has already been to 20, 22, 22 and a half. Let's just go here, click on this, and just take a look at the 20 to 30 range. So you have bets being made in March, July, the 25s. These are all calls here, 30s, Jan 30s. People looking a little bit more. It's one of these things where the stocks are so beaten up. If they open up their business again, essentially, then that might take some time. But by the summer, if they talk about opening up by January or by next year,
right,
then that's why people are playing this a little bit longer term. You're starting to see these pockets where it's a little bit longer term. You have some stuff around here, which is this week, 14,000, 13, 15, in February. April stuff, you have 44s, 44 here, 18 and 32 and the 25s. So it looks like today, if we go back to where we are today, it looks like March, they're shuffling around. You see this open interest in March, 17,000, 36,000, 22. So it looks like they're shuffling it around, but still playing. It looks like they're trying to play the upside here. So it might be it's always hard to tell when you have this here, but it looks like it might be shuffling of getting out of this, and getting into the 25s and 27s. Does that make sense?
Yep.
Good. So let's look at 25, 27s. You're looking at, let's just call it 35, somewhere around there, 32, 34, 35, even 33. All right. So let's talk about 31 to 35, somewhere around there, 31 to 35 by March. So now we can just go to, let's see here, daily. Okay. I'll make it a little bit bigger for you.
Cool.
Okay. So we have here, CCL, and we see this, obviously, this big drop here. We're talking about a stock that was $50. all these RCL, CCL, NCLH, they're all look like this. This is obviously a big level. I mean, this is clearly a big level. You don't have to know anything about technical analysis, and all you have to do is look at this and say to yourself, look at this sort of level right around 24, 25, call it, right? There's a gap here, okay? There's resistance here. It comes up again. It takes 6 months to come back here, and you can get resistance there. But this time, you see how this went up like this? I want you to keep on understanding what I'm saying when the patterns mean something, right? When this is one way to look at the rejection. This is another way to look at the rejection. You see how this rejection is sharper here than it is over here?
Yep.
Okay. That's a clue. That's a clue that the stock is trading a little bit better. People always ask me about, how much techno analysis. I'm not a CMT, which is a chartered something technology. Whatever they are, these guys, they go to school. I've looked at a million charts, and I'm pretty good at patterns. Not good at much else, but pretty good at patterns. And I see, these are the patterns that start telling you how stocks act. So this is a rejection. This is also a rejection, but you see this, it's saying, yeah, we don't think it's going back, this 16 level just yet. It gets a little bit higher low, which sort of meets where it was here. You see that? You see, we just draw horizontal lines.
Yep.
Right? Big volume. Look at the big volume here, big volume here, trades back through. Okay, so now we're here. We hold again. It trades back up, and it's kind of fighting this level again. So we've been here before, June, December, and now it took a little bit less time to get back there. The market is trying to say, hey, if normal is 50, this is completely, we have no clue this thing is going bankrupt. Okay. Then it's, maybe there's a vaccine. There is a vaccine. There are vaccines. And now we're sort of saying, well, there are vaccines. This is normal. This was a disaster. That's 42 points of difference. The market has now come back 14 points, which is one third, 42, a little bit more. Let's call it 35% of where it's of this 42 point difference, right? And that's what it does. The more news that comes out, the next level is somewhere you see 30, 32, it stopped for a second, and then the next level over here. So the market's going to do in CCL, it appears to me, we'll just do this lockstep. It'll go, we can go sideways all the way over here too. So it'll go from 8 to 16 to 24. Notice that 8, 16, 24, 8 plus 8, 16 plus 8. I'm sorry. Yeah, 8 plus 8, 16, 16 plus 8, 24, 24 plus 8. Look at that, 32, 32 plus 8. Okay, it's 40. I was a little high there, but 40, lo and behold, gets you right around here, which is that gap. Okay, so you see these steps, and we're trying to get, this is normal, right? We're trying to get back to normal. Yep. Okay, this may take a year and a half, right? This from here to here may take a year and a half, but it's sort of giving you the idea of the way the market functions as this odds maker, probability adjuster, however you want to call it. It's the probability of being normal, and we're climbing. And from here to here took 7 months. We got the vaccine. Market's a little bit more excited about it here. It's not being rejected as it was before. This is just like a bounce because it went so fast. And now we're at 24, 25. So why are they buying March? And I'm thinking, why would they buy March? I said, let me just look at NCLH, and NCLH. Okay, NCLH has got earnings after the close today. Okay, so there you're also seeing some other volume here in NCLH. So I looked at that, and then I see this, which looks interesting, but then I see this right here, 25, line 24,000, and this here, 18,000. Do you see that?
Yep.
There's something going on here that, sometimes analyzing we got to take a second here to digest what's going on here. Sometimes analyzing UOA, knowing what to look for is good, and then knowing what to avoid is also just as valuable. Okay.
Mhm.
In the event of this trade, I believe it's a funding trade. Okay. So what does that mean? Funding trade has to do with interest rates.
Okay.
It doesn't have to do with the direction of the stock. It doesn't have to do with whether it's going higher or lower. Just because there's options volume, that doesn't mean that it's UOA that we're going to care about. Okay. To give you an example of why I believe it's interest rates. Well, one, interest rates are moving around. Okay. Interest rates are going higher. Internally at a bank, it's important to understand the functions of the bank, which we talked a little yesterday, the basic function, lending and borrowing. But inside the bank, there's 500 groups that are using the bank's capital. Everyone's got a business. There's a derivative business. There's a stock business. There's an investment banking business. There's all these different businesses, okay? And each business is taking some capital. It takes capital to run a business. That capital ultimately costs some money. So the banks, they charge each group a certain amount of interest to use their capital. It's important to understand this because when you see these trades, it's going to be directly related to this. When one group, let's call it a asset management group or someone within the group who's using JP Morgan's capital, and there's trillions of dollars of capital to be used, right? But they're using, or Wells Fargo's bank, when they're using their capital, they get charged something. So you're sitting at JP Morgan and you have this business where you're holding stocks, and JP Morgan says you're using an enormous amount of capital and interest rates are going up, and we're really taking a look at where our capital is being used right now. Okay, because with interest rates going up, we need to free up capital. Why? Because I don't make that much money from Marco, meaning the bank, right? You work at our bank, fine. I'm not making that much money from you, so I got to charge you more because if you're using my capital, I can't lend it to John and Mary Smith who want to buy this house, and there's millions of them now, and I want to keep lending to them because I'm getting 4% of my money there, and you're only giving me internally 2.5%, so or 1.5%, whatever the interest is, and so they will say to you, they'll say, I want you to get out of this, whatever. I want you to reduce your capital. So how do you reduce it? Otherwise, I got to raise your rates. I got to raise your rates to 3-4%. So how do you do that? Well, in the options market, in every single option, there is this interest part to the option. Okay, there's this and when you stick it in the model to get those prices, you have to stick in one of the things in the Black-Scholes form is interest rates. So when you stick in the interest rates, or when you stick in prices and everything else, you can back out what interest rate is embedded in there. So if Marco is working at my bank and I'm telling you, I'm going to raise my rates on you, and otherwise you got to reduce the capital, you reduce the amount of capital you're using, you're going to say, okay, well, how can I be long NCLH and not use as much capital? Well, you can go into the options market. And you can do that by essentially, if we look at it, you can actually buy calls. Okay, you can buy calls and you can sell puts. So buying calls and selling puts is the exact same thing as buying stock. Okay, it's the exact same thing economically. Okay, but you're using less capital, and you're using maybe using about the same capital, but you're getting charged. You're going through the options market to use that capital, and you're getting charged a lesser interest rate. For example, if you worked at Morgan Stanley as a brokerage firm might have as capital increases might have a much higher cost for capital, whereas JP Morgan, one of the biggest banks in the United States, has very little cost. So JP Morgan might be willing to lend basically through the options market, might be able to lend Morgan Stanley. It's basically lending the money. It's using interest rates within the options, within the pricing options to lend them money. So Morgan Stanley, in this case, would go into the market. They would buy the 25 calls, sell the 25 puts, and they would actually sell stock long. So there's three components. They would buy the calls, sell the puts, and then they would sell stock. Okay. That takes the stock off of their balance sheets, right? And it allows them to put these options trades on at a better rate. Okay, for that particular group within the bank. That's what this trade is. And there's several of these trades going on today. Okay, so several of these trades that we've seen, which people might be screaming, oh, you away, because they're calls, and really it has nothing to do with direction. So sometimes understanding what you're not supposed to look at can can keep you focused on what you are supposed to look at. So
Yes.
NCLH, this trade right here, is not something that you would look at. Go ahead.
And also, I have seen that in I think it was Starbucks and AT&T.
I did see it because I always watch Starbucks, and I did see Starbucks today.
When I
The
see
same-
that volume on the side, I get excited, and then when I see what's happening,
Yeah, it's the
I'm like,
same thing.
yeah,
You see
yeah.
20,000, 20,000, and it should say spread. It should say spread here. 20,000 spread. Okay, so it's a trade that's coming. And I don't know. I'm not 100% sure. I'm about 98% sure. It could be just somebody comes in and doing, doing something like a buying a straddle or something like that, or selling the straddle. But it looks to me like it's a funding play where they're buying calls and they are selling the puts. Okay, so they're doing this to fund it and it's only for 4 weeks, but maybe that's all they need it for whatever reason. Sometimes a bank has a policy and say, we got to free up capital till the end of the quarter, or till this or that, or we're going to charge you higher rates. And when they make that statement, we're going to charge you higher rates, people within the bank say, okay, let's get out of this. I don't want to pay those rates. I'll go into the options market and we'll find a broker to connect us to JP Morgan or Bank of America, because they have the best rates, and they'll make a little bit of money, but we'll also make money. Right? We're saving money and they're making a little bit of money, but we're somewhere in the middle. Okay.
Yep.
Okay. So that's in Starbucks. And there was also, I think, another one, AT&T. Same thing. You see, this is
March.
Not March. We're looking at here, 111,000 options, AT&T, 50,000, 40,000. So this is same type of thing. But here's the open interest already there. So somebody might be unwinding it, or maybe they're just adding more. Maybe they're adding more, but this is same type of trade. I don't believe it has anything to do with what we're doing. It is unusual options activity because it's high. There's 110,000 options trading there. It's going to pop up on every screen. Everybody might be talking about it. It could be 1 million on each side, and it's still not going to matter on for us. Okay, so something to keep in mind. Is that fair?
Yes, thank you.
All right,
Great.
Both sides. You're looking for puts and calls. Good.
Right. Next up, you want to take a look at Verizon.
Verizon, yes. So big news, right? I mean,
yeah.
We had Buffett coming into the name yesterday. Stocks up 4%, and people coming after calls. Verizon is a name that has a good dividend and is always something that the big institutions hold. So, let's see here, Verizon. Just want to see. So Buffett basically had to announce that on this date right here, December 3rd, right here, he had announced that he's long all these, what did he buy? 147 million shares worth about $8.6 billion. Okay, now he could have bought that stock. He actually could have bought that stock back here. So he gets a pass. He's one of the only people in the world, one of the only portfolio managers in the world that gets a pass if they're buying stock, because he basically says, I'm trying to buy 147 million shares. If I buy 10 million and then I have to announce, people are going to get in front of me and then I'm not going to be able to buy it. So he writes to the SEC, he tells them to get along, and they give him a pass. And so months go by. He could have done this for the last couple of months, but it looks like if he started in October, okay, on this dip, maybe he's buying it on this dip as it goes down, and then he's buying it all the way to the end here. It looks like he probably averaged 57, 58, right? Through this quarter. And if he did it here, okay, he's a little bit better. But net, people are saying, there's a Buffett premium where he announces here or it comes out here, but he probably bought it right where people are buying it right now. So people are saying, if Buffett can buy it at 56.5 and he can buy $8.5 billion, then I can buy it at $8.5 billion, and I want to be along with Buffett here. So I don't blame people for buying it right here. It looks pretty interesting. It's recaptured this 55.5 floor, and you're looking back over here again. I want people to get comfortable, especially if you're not this, maven with technical analysis. Just like eyeball the thing and sort of look to see where there were these turns. So I see turn. Okay, breaks through. Okay, holds, now it's support, breaks through with decent volume, and then over here looked like it broke down right around this. So just one line cuts this in half and tells you a story. And I want people to, one line, just what's the most important line. Then there's after the other ones are important. Obviously, the highs, this is a low here. That's interesting. So we got 51 and a half, 56, and a half. So call it 4.5, 5, and 4.5, 5 gets you to 61. So you could see this. It's, we're just building this framework of where the stock can go. So if anything, I would say people are probably guessing. My guess would be people are guessing 61. That's what I would guess, right? Just I built this. I would guess 61 is where it would go. And you can just look here and say, okay, 57 and a half. What's if I put the target price? The pointer's right there. So voila, it's not magic. It's right. It's the process. Just we can do it one way or we could do it backwards, and it verifies sort of what people are probably thinking here, why they're buying particular options, and they're probably looking for a 61 print, over the course of the next few weeks, if they can get good earnings or a good market or whatever. But that's, again, how you would try to look at the UOA and say, is this something that I want to get long? It recovers on a 50-day moving average on the weekly. It recovers that here. Again, this is a level to watch, so there's a lot of positive things happening here with today's move, right? This is A, B, C came down. You can look at those types of patterns, the A, B, C, D pattern, but this is, something to watch. You see this right here. This is the same line we drew. And then it's coming from, you can even go further back. Again, I advise people weekly, monthly, get a picture of how this stock has moved over time first, then start drilling into sort of where we are today. But this is obviously a positive development. Buffett's getting long, and you're getting long right around where Buffett got long today. So they're buying they're buying these, and they're looking for a move back to the highs. Nice. Is that fair?
Yeah, looks very good. Cool.
Good. Let's take a look at what else do you see?
Wells Fargo. I mean, banks in the payments and stuff like that.
Yeah. Okay. Well, Wells Fargo. We talked yesterday about it. How they've been getting long these banks. And how Wells Fargo was a name that really wasn't acting. You look at JP Morgan. JP Morgan was trading up. It trades up again here today. And that chart looks much different from a Wells Fargo chart, but we talked about how there was call buying in Wells Fargo and how, you get from here to here. How do you get from here to here? Well, it turns out that the Fed, was call buying yesterday and over the last couple of weeks, and the Fed just announced that they were accepting Wells Fargo's proposal because to clean up their governance policies. Basically, there's a lot of fraud and fraud allegations that were made over the last 4 or 5 years, and they wanted to get cleaned up. They punished Wells Fargo. I didn't know this. They punished Wells Fargo by capping the amount of capital, their base that they can be using, their asset base. So that was, I think in 2000, it was close to $2 trillion. Wow. So they couldn't go above. So for 2 years, they've been capped. So that's why, while all the banks are increasing, with the market exploding, with, real estate having its boom over the last couple of years, you have this cap, which might be released now. So there's steps in releasing that cap of their asset base. And if it's been on for 2 years, going back from right here, and then you have this virus, and then they can't come back the way a JP Morgan comes back, there you go. It's going to underperform. But if you get the ability to grow your asset base again, basically it just means flood the market with more loans and keep, people need a house, fine, get that business back going. Then, and also do things in the financial markets and whatnot. But you could see how this can get to this with more good news. So today they're pricing this move at 10%, 9%, and that is, maybe this is 33% of the way there. So you add another, call it, this is 30 to 7 and 37 in 3 days. Part of that is okay, interest rates, but part of that smells like somebody knew this was coming. So call it $5, 5 times 3, 15. 15 plus 33 gets you to 48. So that sort of puts you back to normal right? Where normal was when it was.
Do you guys see me? Let me know in the comments if you see me. You saw my face. Just type yes in the comments if I'm here and you can see me. Okay. You guys can hear me and see me. Just checking. I'm gonna see where he's at. Okay. You can hear me. You can see me. Cool. All right, just me, but not Felix. Okay. Oh, they lost power in New York, he says. Yep. Yep. We'll wait for him to come back. Is the power back on? Let me know, you guys, if you have any comments and things, so I can have some questions for Felix when he comes back. Cool. Okay, I see. All right. Do you see anything else in the UOA that has some substantial amount of volume and it's good expiration? Let me know in the comments. Expiration, strike, how much volume, etc., etc. Okay, yeah, this is a little bit awkward, but we're gonna make it work. Yeah, I don't know. There was a snowstorm and the internet was really bad for a couple of days in New York. We managed to work our way around that. Okay, let me see. Okay. In the meantime, I'm going to tell you guys a question that I had for Felix today. Let me know if you guys want to hear it. And it's actually, why aren't we looking at and buying more stock puts? We're mostly focusing on the SPY. And that's something I'm really curious about. Is it the market? What do you guys think it is? I was thinking about asking Felix that today. I think it's a pretty good question. He can cover some good ground on that. And then, all the SPY discussion we had yesterday is really good. I think you guys should definitely take a look at that. There was some good analysis, good things. Felix has a pretty good skill of hitting these SPY puts. So, I'll definitely pay attention and take a look. Okay, Black, we can see you. Okay. Yeah. Yes. Okay. His power is back on. It's coming back on. Sit tight. He's coming back. So we're going to be all good. Thank you guys for all the support and the positive messages. Okay. We really appreciate it. And what I would like to ask you, if you have, friends, family, anybody who's into options, stock trading, that you share this podcast with them, that you can help us grow. I've learned a substantial amount with Felix over these past couple of months. And I think it's what he's doing is really awesome. And I'm hoping you guys are learning as well. Okay, here he is. Cool. Hey, Felix, you back?
See, you talk bad about Verizon, and then all of a sudden it's like,
dude, they bash your power. Yeah, I was just having a pep talk about, how much I learned, how much this podcast is great. And
by the way, you know what I have to say? It's so weird because, all right, so we're just talking about Verizon, and it's like, boom, blows up. So I got an email from Google. We had talked about like DBX, and within like 24 hours, I got this email from Google that said, Google has this new workspace and we want, and I just thought to myself, well, I'm sure somebody's always listening, but anyways,
right.
I'll be careful about
we are on
Verizon.
YouTube, right? Yeah.
I'll be careful about Verizon.
Right.
All right. So where were we? Jeez,
okay, we were at, let me tell you, Wells Fargo.
Gotcha. Okay. So basically so Wells Fargo, again, you have my chart up here?
No, please share your screen.
Okay, so let me share my screen. So Wells Fargo, I want everyone always has a question about the technicals. I get a lot of emails about technical analysis, and I don't think you have to be. It's good to get the answer from who has a CMT, but just try to use common sense, right? And look at the chart like I always say, like a 6-year-old, right? And just say you're drawing crayons, you have crayons, and what's the line or where are they? I always look for these V's. So we look for the V's that make sense here, or something like this where it's clear there's something going on here, and we can just draw the line all the way over. How about over here? I see 3 bottoms and draw the line all the way over. And how about something maybe up here, 51? So, I can just do this and show just a framework of what's happening. And then now I have a better sense as to where things could go. I was talking about, we talked about it in CCL and the cruise lines. We could do the same thing here. Normal is 51, right? You're going back 2 years. Normal is maybe 58 to 50 to 51. In Wells Fargo, they were capped on their asset, on the amount of assets they can have on at 2 trillion. So they're capped somewhere around here in 2018. And now the Fed says, we're going to accept your proposal on this whole governance plan, and you're going to revamp things. And okay, that sounds great. There's a certain number of steps to take in order to get back to increase your asset base, which will allow you to make more loans, do more things, whatever it is you're going to do with your capital. Okay, so you're capped at 2 trillion. Meanwhile, for the last 2 years, all the banks have been exploding. Their capital bases has been going higher. Okay, so again, it's the same thing. You got to think about it in steps. Like here, you're going from 30 in 3 days to 37, and it just so happens that the Fed makes good on their proposal here. So that's, again, coincidence maybe, but this 3 days was a sharp 3 days. Some has to do with the yield, but let's call it $5. So $5 here, and it's probably 33% of the way done to get back to allowing them to increase their asset base. And you have, so 3 times 5 is 15. So 15 from here would get you back to about 45 just on that alone. So maybe, we're starting to look at something like 45-ish with a good outcome there. And then you get a yield curve that's good, and then you're going to get back towards the 58. So I'm not saying this happens anytime soon, but we talked about these banks and how fast they can make money with a good yield curve. And you're going to be hearing that a lot. Net interest margin is what it's called. So when you're looking at the banks and you want to look at banks' earnings, that's going to be very key. Net interest margin. It's been very bad for the banks over the last, call it 3-4 years. They've been battling that because the long rate and the short rate, there's no money to be made, right? But when that goes from, they're going to keep short rates low, and then the back end goes higher because people expect inflation, then you have, you're lending at 4 or 5%, and you're basically paying Marco nothing, then you're going to make a lot of money, and you're doing that a billion times. It turns out to be a lot of money. So this is what, again, it's up $2 on this, on the Fed saying it's okay for just for their proposal. But again, a mechanism where probabilities are, it's getting closer to, they're going to get back to normal. Okay. So I guess maybe that's the theme today. It's sort of like how the market is it's an odds maker. It's what I'm doing with you and what we're constantly looking at, the odds, right? And the probabilities. And as we get closer to normal, the market's going to price in a higher price, because normal is here and everything's great. And so we're going to keep doing it. You can do that with any stock at any point in time. And if you wanted, again, I'm not an expert in technicals. I know what I know. I like what I know. I frame it. So you literally frame it with a couple of lines and you move it along and you start thinking, what am I looking for? So with Wells Fargo, when they, you can go back to Wells Fargo and say, okay, what are they looking at? What are they buying? They're buying the Marches. And they're buying, the 37 and a halves, the 40s. You're talking about here. I mean, we're just throwing the numbers, 45. So, to be buying these and trading the 37s and 40s, you got to be thinking in the low 40s. And if you go out to April, and I think earnings are going to be in this April month, April, probably the 15th. It's usually that's when it's at. And you're paying for the 40s, 8,000. You see all this volume? You're talking the same thing, 40, you got to raise it higher to like 46 okay, for April. So next earnings, that's only a few months away, but 46 gets you where? Look, exactly where we were saying, So again, it's yield, the net interest margin, plus this has a story behind it where it can get back to normal and expand their asset base. So that's what people are targeting right here, with the Aprils and somewhere around 40 and 45 for the Marches. Again, when you're doing this, you're looking, does what we just drew on the chart, does it match what people are buying in the options? And then can we have a story behind it? Well, that's what we just did in Wells Fargo.
Okay. Nice.
So that's how you're trying to do it. It's that process of finding buyers, which I'm assuming this is buyers right now with the stock up, and I haven't looked that closely into it, but let's just assume it is finding buyers, taking a look away from what try to race your mind, take a look at the chart, see what the chart's doing, and you could do it backwards or forwards, but one shouldn't affect the other at first, and then you're looking for the story or the background. We had that because the news came out today, and that's how the story comes together. The three pieces start melding together, and then all of a sudden you say, you know what, this looks pretty interesting. Do I want to buy it right now? That's the last part, right? Do I want to pay for it right now? You know what? On something like this, you see this line right here?
Yep.
Again, a big level. See how it knocked off right at 37. So if you drew that line coming in, you would say at 37 and a quarter, probably 37 and a half, probably gonna have a little bit of trouble. So look how it stopped right there. Okay. We didn't change this. This has been there since we got in this morning. So it just like the market pops up, opens here, trades higher, gets to 37 and a half, comes off. I would like to see it come back maybe to 34. I would love to see something like, the market does this one day, and then over the next few days kind of does this. So this, and then I would, we're trying to get it to, you're trying to play that, back to 37. Let's revisit 37 again. Who knows? If you do that and it goes up to 41, yeah, you're going to have missed it. So that's a little bit of what you can't always rely on technicals, but it's something, again, it's how you want to think about it. If you want to jump in, if you're trying to trade 10 lots and you're like, let me just buy one or two here just to have a placeholder, knowing that you're probably, I would say it's probably 60-40 you're going to lose, then on those two, but you're going to get a better price when it gets to 34, 35, then that's another way to play it too. So that's the trading aspect behind the UOA, right? So you have the UOA, the process, the technicals, the story, and then the trading aspect is, what do I do right now? Do I get in right now? It's reaching a little bit, right? We got from 30 to 37. There is good news, but it could be reaching here a little bit.
Okay.
All right.
Great insight. And now that you mentioned these almost with payments, I think you want to talk about Visa and MasterCard. I think it was Melvin that was
good.
That the
story? So same thing, right? You talk. Let's again. We're looking at the news. We're looking at the news here, and we're seeing that Melvin Capital did get long Visa, MasterCard. And again, Melvin Capital, I don't care that they just blew up. The guy's been lights out for 4 years. He's screwed up big on one trade, got caught in a squeeze, and almost took down his fund. Doesn't take away from him killing it over the last 4 years and being right most of the time. Okay, so I want to pay attention to Melvin Capital. I absolutely respect what he's done, and he is considered one of the best. And even the best have, hiccups, big hiccups. Okay. But here is, let's just try to find where he is. Melvin Capital. So I'm going to click that. And again, this is December. He might be completely out. I'm not saying that he still owns this, but I want you to understand, take a look at his portfolio and see all of a sudden he shifted a lot in the fourth quarter. And look at the two names he's put in $3 billion. Okay. A big part of his portfolio, MasterCard and Visa and Expedia. So it shows you and it tells you something about what he's playing, what he's seeing. You think he does that without massive research, without data, without clear insight as to what's going on? Like this is what I'm trying to say to you. I'm trying to say, take a look at this and let's say, wow, what is he doing here? The other thing I'd say is, look at what else he's getting long. Alphabet, which a lot of guys, Google, a lot of guys are getting long here in the fourth quarter. Facebook, he's getting long here. That's his fourth biggest. He just opened a position in Facebook. Okay. We've been talking about Facebook and upside calls being bought in Facebook, the 300 calls. Okay. Can you have something in Facebook that is, similar to an NVIDIA? I mean, look at this thing. This thing is a pretty tight flag here up top, right? But that's the weekly, so we see what we're at. But let's look at the daily. If you look at the daily, this has had a long time. This has had a long time to do nothing. It's a long time to do absolutely nothing. And or maybe it's more like this. Okay. And yes, I see that this is, you can look at it both ways. Oh, it's starting to trend lower and it's, or you could say this is a massive move. It's digesting this move. And the next move is lights out through here. And remember, if we break through, this is a down trending line. If we break through this 280, by the time you get over here, 280, 285, you could see a move up. I don't know why, it looks like it's big cap. I mean, he's also getting long. You could see. Microsoft, he's getting long. He got out of some Pinterest, but turned it into calls. So you see, he got out of some here, bought only some back in calls. That was in probably in the last earnings. Okay, so he just got out. Who knows what happened since? But he got into Microsoft. So you're starting to see like some bigger tech names. And again, this is just one person, but I would go through several of them. And you start seeing some patterns here and there, and you start seeing where people placing their money. He was very big, Melvin. If you went back and looked at his returns in September or not his returns, his positioning, he was big in. I don't know if he's still in there, but he was big in SQ, Square, and PayPal. But it looks like he's gotten out of those, and he sort of switched into MasterCard and Visa. He also this is also, by the way, okay, so this is also a payment company, Fiserv. Now he cut it in half. He was really big in this name, but this is also, this is the Zelle app. Okay, so Zelle app, Visa, MasterCard, obviously payments, and then Expedia, which is traveling, all kind of go together, right? Kind of go together. So I think it's when I saw that, I just thought it's pretty interesting. Guys betting on I guess people buying, if you're buying on the internet, everybody's buying, there's no cash anymore. So if whatever the whole world was, let's say the whole world's buying patterns were 40%, 30% cash, 70% credit card. Now with coronavirus, maybe it's 90-10.
Right.
What does that do to MasterCard and Visa as a general trend over 5 years? It could be blockbuster, right? This could be huge.
Right. And these three are pretty much international companies. They're not just US tied.
Right. So, consider that. I mean, again, like just by looking at it and talking through it, we can sort of come up with things that are interesting to think about. Okay. So that's, again, taking a look at UOA, taking a look at 13Fs. Who are the sharks? What are the sharks doing? How are they positioning themselves? I'll take a question. Go ahead. You have a question?
Great. I do have a question. I do. And I wanted to ask you, because we've been looking at this stuff for a while now. I've been seeing a lot of what you were sending out, and we aren't buying a lot of stock puts, right? We're mostly focusing on SPY puts. I just wanted to know why. And
yeah, it's simple. There's nobody buying puts. It used to be in the UOA. I would come up here on the UOA and I would say, okay, I'd click on puts. I just sort by puts, and I would see a page, 2 pages of 90%, 85. Now it's rare that I see. It's rare that I see more. This is rare to see 3 that have close to 70% in puts. So we have some put buying here. Dash, DoorDash. This is NLY. This is a REIT. Akamai, AVGO, Broadcom, Chips. So, you're starting to see a little bit more, but it's still not a lot. It's not like, it's not huge, meaning a huge set of put buyers. It's also not a lot of puts. And frankly, some of these are down in vol. So I suspect that you might even be getting something that is like selling calls, buying puts maybe, but the vol's down. I don't know. I'd have to look at it, but the main reason is that I wasn't seeing UOA in puts and stocks. Really, I would say over the last almost year, we're going on almost a year where ever since the market started climbing, the I would say 7, 8 months. The put volume on single stocks has been very, very low. And then whenever you try to buy puts, you're getting it, it's usually not working. It's usually
Mhm.
not working. So I switched to the SPY simply because it's something that's manageable. People look at it. It is the market. It is. It doesn't cost a fortune, right? The implied vols are fairly low.
Mhm.
Obviously it doesn't move like the stocks do, so
Right.
it's supposed to be. But as far as being able to buy a few, you're able to buy a few on a $300 stock. And I think again, I think it's about picking the right spots, and we've been doing that in the SPY over the last year. We're probably it's probably be I would say, if I had to throw a number, I would say 50-50, which is really good. So 50-50 on the SPY. And then I think what's important is when I'm buying the SPYs, in the time periods, I think we're catching those really sharp drops. So, I think I'm doing my job with the SPYs. Frankly, yeah, Sunday night I was thinking about or Monday night I was thinking about SPY. I chose something else, thinking I can get through this week. We had a little bit of a drop here,
Mhm.
but and also Monday night the market was up 25 handles. It was up almost up, it looked like it was going bonkers. So I thought, let me just wait and see how it trades tomorrow. But yeah, I mean, uh, there's not a lot of put buying in single stocks,
Mhm.
and that could change. One thing, it the cost of these were pretty high, but we looked at ARC, and we see ARC today trading, we saw 18,000 puts on the 120 line. People think you're crazy to think it's going to go down. It could go down quickly.
Mhm.
If Tesla goes from 700 to 400 for whatever reason, you could see ARC trade down very fast. And
Mhm.
remember, it's not just Tesla, because if Tesla goes from 800 to 400, what does that say about every EV stock that is basing their whole analysis off the lead horse? So
Right.
these are the things that I worry about. And like yesterday, I look at Apple, I look at Microsoft, I look at Google, I look at Tesla, I look at Neo. Not because I want to trade them at every day, but they're the leaders. That's what we're going. That's
Mhm.
If they're doing well and they're pushing their price earnings and EBITDA numbers, if they're pushing those things higher, right? Then we want to actually look at these smaller names to catch up. But if those things are coming down, there's a problem. There's a problem with the analysis on everything else. So
Mhm.
you're kind of building this pyramid, and when you take out the base, it's all based on the top guys. So you can get a return very quickly. That's what I would say. I would also say, talking about the SPY, but this could lead. That's what I would say. That's the simple answer.
Okay.
When things come back to normal, I'll have 3 stock puts versus 7 calls if I'm leaning a little long, or vice versa. I'll have 6 if I think now's the time we got to be long puts.
Mhm.
Then we'll switch. But right now, there's just not much. So
Okay.
that's that. One thing that is very, very important, that we're always trying to be a couple of days ahead of the curve here and with news, and you see that. But I think within the next 3 weeks, you're going to hear this. Okay, within the next 3 weeks, I'm sure you'll start hearing this. There'll be research out on it. The people start talking about it. You're going to hear this. I'm going to show you the charts here. So we're going to
Okay.
look at the charts. Close this here. I'm going to show you. This is bonds. So in general, I'm always looking at bonds to see what's going on with bonds, and bonds is the biggest part of the market. Currencies, bonds. So when bonds are making this type of move, this is, you know, this is a
Huh.
big deal. This is a really big deal. Bonds getting killed, right? Interest rates going up, bond prices getting killed. What you're going to start hearing is that since December 31st, the bond market, the TLTs, this is a barometer for the bond market, is down 7.75%. Okay, the
Mhm.
bond market is down 7.75%. Since that same day, so keep that number in mind, 7.75, almost 8%.
Okay.
Since that day, okay, the December 31st, the stock market is up 4.75%. Okay, so 475 and 875, that's 13.5% difference.
Wow.
It's a massive. We're talking about there are funds. So how does this come into play? Why is it important? There are funds called the 60/40 funds. And the 60/40 funds, they invest 60% in bonds, 40% in equities. In general, over the whole market, the market might be like 140 trillion. I don't know what it is now. Maybe it's 140 trillion dollars. If you look at the amount in bonds and the amount in equities, it's maybe 65/40, 65/35, 60/40. Right now, it might be 55/45 because everybody's in equities. It's moved, but it's going to be around 60/40. But there are actual funds that try to keep their balance at 60/40. Okay, so you have this situation where bonds have gotten hurt by 10%. So things are moving down. The percentages of your bond portfolio is moving down, and equities are soaring, and that's moving up. You're now at maybe 50/50. So at the end of the quarter, sometimes they do it monthly, but at the end of the quarter, you got to be at 60/40, which means you have to do what? You have to actually buy bonds and you have to sell some stocks to get to 60/40 again. It's called the rebalance. We've talked about it here in the past. We've talked about it on the winning picks for a while. This rebalance is a big deal because when you have, I think there's estimates of $8-9 trillion that are tagged to this rebalance. And if they got to rebalance, they got to take those percentages, and from 50/50 go to 60/40, which means you can do the math and you start doing the math. And it's all guesstimate work, but there will be reports over the next few weeks. And believe me, when there's hundreds of billions of dollars for sale or to be rebalanced, it doesn't happen. It doesn't happen in 48 hours or even 72 hours. It takes, it'll take 2 weeks, maybe even 3 weeks. If it's that much, it might take the whole month of March. So, over March, you might say, hey, the market's not doing so well. Keep in mind that it might be these funds that are rebalancing that you just haven't heard about it yet. But they will be there to do that unless the market collapses before that and then it closes the gap and bonds make a move up. But if you see the next move in bonds, it looks like bonds wants to do this, just take a look at bonds. And by the way, if you go back to September, October, right? The October, this third quarter, you'll see that bonds even started. It's even worse, and you can go look at it yourself. You could see that bonds from the September quarter or the last quarter, the October quarter, was 11%. And let's just give you some. And by the way, notice that it was going down into December 31st. Okay, and you never got this sort of move back because people were thinking about this. They were talking about this in the fourth quarter, how there was going to be a big sell-off in the end of December. So the stocks went from September 30th. Let's just go from September, here, up. You're talking about 18%. So since September 30th, the market's up 18% and bonds are down 10, 11%. You're talking about this is a massive move in the structure of how the world usually holds their portfolio. And they have to adjust. It doesn't seem like they adjusted in December 31st. And a lot of times they may not do that because maybe they adjusted too much over here. So they allow it to roll and allow it to keep going. Do you understand?
Yep.
Over here, they were right here, people started talking about them buying stocks because they had to buy stocks because bonds actually didn't get hit as much. Stocks were getting killed. So they would buy stocks and sell bonds. So maybe they were working their way up, but this is a massive move. And I would bet that right now it's February 17th, right? What is today?
Yep.
The 17th. So it's a short month. So in 2 weeks, you'll be at March, the first week in March. In 2 weeks, you will get research reports on how this is transpiring. I don't know where the market will be then. The market could be 380 or it could be 400, but it looks to me like, you get this, you see this move right here, coronavirus, boom, down. It looks to me, this is starting to not look so healthy here. You're here, but then you're going here, and now it's starting to go here. The next thing looks like it's a straight dump over one day. I don't know if that's coming how soon or whatever, but it looks like a straight dump coming. And the US dollar, the UUP doesn't look, I mean, just look at, so these are big, if you want the macro backdrop, which you should consider, this is the US dollar over the same time, just been getting killed, but it's actually, with interest rates going up, you might see this thing start pushing back up. Mm-hmm. So this is good for them. This has been great for the market. This, back to 25 might not be so good for the market. Okay. So things to think about. I think that's important. Again, giving you big picture, trying to bring the U away is just one thing that should lead you to something. Something is going on. Then technicals can help you frame, and then digging into the story or the backdrop, whether it's macro, whether it's news story like a Buffett getting in, or whether like we did with Visa, MasterCard, try to frame that story, and then obviously sticking the events in there. All of this is part of the process. And then you see the trading aspect, which is, well, do we buy it now? And my instincts and my trading instincts would say in Wells Fargo, maybe we just wait. I don't like reaching, especially after 3 days, and then you buy something and it doesn't work. So these are things that could be interesting.
Good.
Cool.
Good. Cool.
Anything else? Or we have.
Let's actually take one question and one UOA that Luis found. Okay, which one you want to do first? Question.
Either one. Go ahead.
Okay, here it is. It's on screen.
Felix, funds have a holding period mandate for their stock positions. Is this true for options too? How does ARK funds buy and sell daily? Well, I think all of these funds, they buy and sell daily, but ARK has to actually put their money to work, right? I think it was some ridiculous stat, like they're getting $100 million a day. They have to put that money to work. They don't sit in cash, right? So they're putting that money to work, and they keep buying their stocks. They're selling some off. They're moving around. But at the end of the day, you can't be sitting on $8 billion in cash. That $8 billion in cash hurts the performance. Cash is not going to make you any money. Mm-hmm. So if the stocks keep going up and you're not in it to win it, then the fund's not going to perform well. So they have to put that cash to work. And you'll hear that from a lot of the big managers. They hate going into cash. They're always moving to something else, right? Mm-hmm. But I think that, do they have a holding period? It depends. Each one would depend on their charter, but I think they're allowed to do whatever they want, frankly. And I think that as long as if you're a long only mutual fund, then you can only buy stocks. Hedge funds can buy and sell. They can buy and sell as much as they want, whenever they want. I don't think that, and I'm not talking from an expert saying I know the answer, but it's my guess that they can do whatever they want. It's their decision. Kathy Woods has her decision on whether she wants to put the money in or not. However, not putting the money in and holding $8 billion in cash is not going to do well for returns, right? It's just not. So I think that's the problem with the ARK funds. It's that she's putting this money to work. It's become so big. It's almost not manageable on the way out. It's almost not manageable. That's why I'm telling you that there is huge risk in this ARK funds that people are not. If you get a move down in the market, a sustained move, not just this like down one day up where she's buying everything because people, it's fine, I'm holding. But you get a sustained move where ARK is not performing the way everybody expects it to perform. Everybody wants 100%, and if it doesn't produce 100%, it produces 20, or God forbid it's down, you're going to see people exit the ARK funds. Right. And if they exit the way she's buying now, pushing these stocks up, think about how that works on the way down. Right. On the way down, it could actually be a lot more violent. On the way up, it's normal. On the way down, when people start getting the emotions get higher, you could see that cascade. So all I'm trying to say is, in a sustained move, ARK shouldn't be trading, in my opinion, at 45 volatility. And that's why someone bought 18. I think it's a smart play. Someone saying, I'm going to buy 18,000 of these puts and I'm just going to sit here. And if this momentum trade stops, and it even stops for a little bit and it goes down 10%, ARK could be down a lot. If Tesla, which just is breaking down here with its levels and it keeps going, that she's a big, I think it's like 5% of ARK. And so these are, everything's got to be held up for it to work. And if it doesn't, and one shoe drops, that knocks down, it's a tree. I keep telling you that the way the 1999, 2000 NASDAQ bubble ended, it wasn't in one day and it wasn't in 1 week. It was just go. You should study history. Go. There's a book. I keep telling you this book, Manias, Panics, and Crashes. I read 5 editions because it kept on coming new. And it's awesome. It's just history. This is how it works. So we talk about the mountain, when I'm looking at every chart and you see the same chart, NASDAQ bubble, same chart. You see all these stocks, the same charts, history, right? So you just want to understand history and start finding a rhyme and a reason why every chart seems to look exactly the same. It's because the chart is actually a representation of the psychology and the mind of what's happening, not valuations. Okay. So I go to Amazon, pick it up. Manias, Panics, and Crashes. It's a good history book to walk through and to understand what we're going through. They go from like the tulips. They show prices of tulips. The prices of tulips. You know what it looks like? Exactly like every one of these stocks that we're talking about. Exactly. You just go look at it. They look exactly the same. So I think it's really interesting. And I think it's worth the $20 or whatever it is. If somebody wants it, I'll lend it to them. I have 5. I think I have 5 of them here. Every edition. Maybe they become a collector's item. All right. Yes. And what's the next question?
And the next one is a UOA question. And here it is. It's on the screen. It's gold.
Gold. Okay. 24 gold. So my first impression, and I don't know anything, is that gold was bought by who? Warren Buffett. Mm-hmm. So Warren Buffett bought gold a while ago. Maybe he added to gold today. So that's why you're seeing, this is just a guess, but just from knowing that Buffett got into gold, GLD, I'm wondering, did he add to it? So maybe you can see here on the side on news, but maybe he had to. But the stock's down. Gold is down. Gold is not trading well. Let's see, GLD, or did Buffett get out of it? No, it's that the gold GLD is down. GLD, the gold has been getting smoked in the last 6 months. There's just no end in sight. But so you have gold here, and you have the March. I see March and June's. Call buying the 24s, and he said, which ones? The Junes?
Junes, yes, 24s.
So I see here 17,000. I'd like to see, I'd have to go back into history and see this 17,000, because it's not like, this is pulling something else here, but it's not like, I don't think gold's been trading down here for a long time. Right, so it kind of just got here. So let's just look at this real quick. All right, so one line, right? If I see one line, I'm going to look right here. See that one line? 22. So you see that?
Yes.
I'm going to start testing you, because this break here, break, support, breaks, comes back up. It's having trouble, right? It's hitting this line. It's having trouble. Break, now break. Okay. Did Warren Buffett, my first question, did he get rid of some? Did he reduce his stake in GOLD? That would be my first question. Second one was GLD. What's gold doing? Gold is down. This doesn't look so healthy here. Okay. This doesn't look so healthy. And here it looked like gold was looking like it was going to, well, here, the first time it went up, it looked like, okay, gold is going to resume, crash, down here. Then you go trying to make a move up here again, looks pretty good. And now it's down. And the next level, I would say, see this right here, this and sort of this triangle. Okay.
Okay.
You like that?
Yep. Interesting.
I would look at these gaps right here. So there's a lot of volume, and then it gapped down, gapped up. So there's something going on here, and you can see that it sort of coincided with a lot of volume here. So it was like, did the zigzag in March and then traded up. So I would be looking somewhere around 17. And we can go back in time and look, but also I would say this is 29.5 to 22. So 7.5. Right, 7.5 from, there's a number of ways you can do it, but 7.5 from this level, so down, 7.5 up, and then 7.5 from 25 is 17.5, which coincides with that. So, okay. So 29.5. The way I just did that real quick, 29.5, 20 set to 22, just called 7.5 to 25. 25 minus 7.5 is 17.5.
Mhm.
Okay. So again, framework, right? To be bullish on this, I'd love to see it get back through 22. So
Okay.
unless it gets back to 22 on good volume, I'd rather just leave it alone here. It looks more like selling pressure. Remember, all these people these are volume that has to be washed out if they're going to, the sellers, some percentage of these guys has to be washed out. So 24 calls look interesting. I'd rather see them when it's 22.5. Show me a 22.5 on a stock. I'll buy the 24 calls.
Okay.
Okay.
Great. Awesome.
All right. Awesome.
Cool. Thank you,
Good.
Felix. All
Good.
right,
Sorry
great session.
about losing power.
Oh,
We won't talk about Verizon no more.
yeah. Cool. All right.
All right.
Thank you, Felix. Thanks,
All right, be
everybody. We'll see you tomorrow.
All right. Be good. I'll talk to you.